The crypto market just lost over $300 billion in the last week, and over $2.3 billion worth of longs have been liquidated. The worst part of all, your portfolio is bleeding. Every single instinct in your body right now is screaming sell. But what if I told you that hitting that sell button right now could be one of the biggest mistakes that you ever make? The one mistake that possibly separates the average person from the 1% that builds generational wealth. Because everyone is panicking right now, but smart money, they're getting ready to buy. So if you're holding crypto right now, what I'm about to show you in this video could be one of the most important things that you actually see in this cycle, and I'm going to prove it to you. So let's start with why you probably feel like throwing up right now. And it's not your fault, actually, it's by design. You see, it's a psychological concept called loss aversion. Studies show that the pain of losing money feels twice as powerful as the pleasure of making the same amount. So when your portfolio drops 20% in a single day, your brain's logic circuits get hijacked by pure, raw fear. And to make it worse, the bloody market makers, the exchanges, the whales, the guys who control the market, they actually know this. They use these violent dips, maybe even causing them sometimes, to trigger your deepest survival instincts, forcing you to sell your bags to them at a massive discount. Now, history actually shows us that these moments of extreme fear, the moments where it feels like it's all over, are precisely when millionaires are made. And in my opinion, this time is no different. But let's get into what actually caused this crash. Was it some catastrophic news? Did a country ban Bitcoin for the 10th time? No, guys. It was the perfect storm of somewhat predictable and inevitable events. First, we had the crypto option expiry. This is just financial jargon for a massive amount of leverage and derivatives contracts all expiring at once, creating insane volatility. Second, you have a sell the news event from the 25 basis point rate cut a week ago that I was telling you guys I was preparing for. And here's the key, I think the most important reason of all, it's September. You're thinking to yourself, Kyron, it's a month. Why does that have any importance in this? Well, it's kind of like a lucky rabbit's foot. Right? It's the red September curse. Now, if you go back as far as 2013, Bitcoin has had a negative return in 8 of the 12 Septembers, which more specifically come, interestingly enough, in the lead up to the last quarter of the 4-year cycle, 2013, 2017, and 2021. So is it really a coincidence? Well, I think whatever it is, it's just a perfect time for market makers to shake out the weak hands, to buy lower before they, or whatever, pumps the prices up. But that being said, I'm sure some of you will think I'm being a little too woo-woo goo-goo conspiracy theory, but I'll move on. What I would just highly encourage you to do when you are panicked is just simply zoom out. Don't look at prices on an hourly, daily, or sometimes even a weekly time frame. Check what is happening on the monthly. When you do this, you begin to get a little less panicked and you realize that, hey, these drops, whether big or small, are all a part of this much larger game plan. It's the market breathing. But in my opinion, the most important signal for whether it's a good buying opportunity or a serious bull run ending crash is by using the 365-day smooth moving average. Now, if this line particularly is broken, then yes, it's probably time to reassess what's actually happening. But if not, it's a pretty good buying opportunity. Now, what we're seeing in crypto right now is more of a dip, but just for your sake of knowledge, if this dip has a dip which has a cousin that dips, then it's pretty important to know this line, because every single one of these market-ending crashes that ended up touching this line was actually just a massive buying opportunity. In this case, we haven't fallen that far, but it's still given us a pretty good buying opportunity. So all that being said, what would an expert tell a beginner to do right now? Well, in my opinion, it's a bit more than just buy the dip, because that's pretty obvious if you have the cash and the risk to do it. In my opinion, the real playbook is what you do before, during, and after these dips. So before the dip, and I think actually at all times, only invest what you can afford to lose. I think the real reason why people panic sell so much is actually because they're just overinvested. They've put in the rent money, their emergency fund, like everything into, when you think about it, the most highly volatile type of asset you can possibly buy on the open market. besides my own little bottle cap collection here. Look, in all seriousness, my personal outlook is that whatever money you put into crypto, it's already gone. Think of it like you'll never see it again. And so when you adopt that kind of mindset, you detach from the market emotionally. It allows you to think logically and not be so stressed. Now, during the dip, this is the perfect time for dollar cost averaging, or DCA. So it goes like this. Instead of trying to time the absolute bottom, which is just like trying to time the absolute top, which obviously is impossible, you invest a fixed amount of money at regular intervals. This week, next week, the week after, and so on. Basically, DCA turns volatility into your greatest ally because you automatically just buy more coins when the price is cheap. But just remember, do not invest all your cash at once. Do it over time, because it's very easy to think the market's finished selling, but in many cases, the market will surprise you. This is called trying to catch a falling knife. Bit of a pro tip, you can easily implement DCA on any altcoin by applying the time-weighted average price tool, or the TWAP, in TradingView. Just make sure you set the inputs to 6-month anchor period. And just like the SMA, it is a free tool. How to use it? Well, it's pretty simple. If the price is lower than the line that is produced from the TWAP, then it's a decent buying opportunity based on price over the last 6 months. After the dip, I would focus on quality, because in a market crash, when the tide goes out, you end up seeing who's been swimming naked. The coins with no interest or their overhyped projects, you begin to see them for what they really are. So if you give me the time soon, I'll show you some of the possible coins I am eyeing off today. But either way, you need to look at these dips as more of a gift. It's like finding a first edition PSA 10 Charizard at a garage sale if you look closely enough. Okay, but how do we know the market will even recover in the first place? How do we know this isn't the start of a multi-year bear market? Well, for one, we don't know. No one knows anything. We think we do, but it's always an educated guess. But why I think it's not is because price action, of course, is screaming fear, but the underlying fundamentals are just simply screaming something else entirely. Because what they're screaming is that a massive blow-off top rally is still highly possible, and here's the evidence. In the third quarter of this year alone, the US spot Bitcoin ETFs attracted $118 billion in inflows, and BlackRock's Bitcoin ETF IBIT now holds over $85 billion. This is a little bit of retail buying, but it's mainly institutions, so it's not the true retail FOMO we're accustomed to in crypto. It is the largest asset manager in the world, and all of the people underneath it buying Bitcoin at an unprecedented scale. As a matter of fact, institutional investors have now removed 7% of Bitcoin's entire circulating supply from the market. If you combine that with the Bitcoin halving in April of 2024, which cuts the new supply of Bitcoin in half, what you have here is a record-breaking demand from Wall Street colliding with historic supply shortage. And that, in my opinion, is the genius of Satoshi. He, she, or they, whatever you want to call it, has halved the flow of Bitcoin at the right time every 4 years. As a matter of fact, take a look at when the halving happens. It's when the global economy is in contraction, when no one is spending money, let alone thinking of buying risky assets. And of course, just like clockwork, when rates start dropping, the business cycle breaks into expansion and the economy booms. Of course, Bitcoin explodes thanks to this new wave of liquidity. But guess what? It's not just this new wave of liquidity from investors that sends Bitcoin skyrocketing like I just said. It's also the halving. It creates the perfect low supply, high demand scenario at the right time. So you can see it was honestly a next level genius move on Satoshi's part, but it definitely came from a deep understanding of how the booms and the busts in the economy works. Because in my opinion, the on-chain data, the halving and so on, is only really half the story. The real fuel, I think, for this final rally isn't going to come from inside crypto. It's coming from outside in the global financial system itself. Right now, the United States is in contraction, and it has been for the last 3 years. This means the world's largest consumer-based economy isn't consuming because they don't have excess cash, which is why liquidity hasn't been flowing into altcoins. They're just the riskiest point along the risk curve. No cash in excess, no risk. But I think we're starting to see the first signals of a massive shift here, because the Federal Reserve has started finally cutting rates. And you're thinking, why does this even matter? Well, rate cuts are the first step in opening the floodgates of that liquidity. And as we know, liquidity means asset prices go up. No liquidity, no alt season. So now, like a monk, we wait and we have patience because there are still reasons to be bullish on the macro picture. Now, there are some experts that most definitely believe the Fed will be forced to restart quantitative easing, aka printing insane amounts of money, mainly in the hopes to manage rising bond yields. So understanding QE and its impact on crypto is going to be a super important part of this bull market. So make sure you go ahead and check out our crypto channel dedicated to macro from our expert over at No BS Macro. In today's video, Frankie is going to be breaking down QE and its impact on your bag, so I'll let him take over this particular conversation. But for this video, let's focus more on the effects of liquidity on crypto. For one, this is the global empty money supply, as you may know, against Bitcoin. Now, for years, Bitcoin's done a great job surfing this wave of liquidity because when M2 expands, Bitcoin's price follows. But look closely at what's happening right now. Global liquidity is smashing all-time highs while Bitcoin is lagging further and further behind. Now, this gap or this divergence, whatever you want to call it, is just simply pure rocket fuel. It tells us that Bitcoin is coiling up like a spring, ready to catch up a new wave of money that's about to enter the system. At least we are speculating that, of course. Global M2 is one thing, but let's just understand for a second that liquidity works in cycles, just like the Bitcoin halving event. The global liquidity cycle comes in waves, okay? And it's all thanks to rate cutting from central banks as their economy slows down from inflation. Funnily enough, it's a system that's pretty much designed this way. And that's, of course, how we can take advantage. And the advantage, I do think, ends around mid-2026. So that's when we need to have our fingers on the trigger button to sell. But until then, we still do have time for the best to still come. So in my opinion, this isn't just a dip, okay? It's the market giving us possibly one last chance. If you want to throw that in the title of the video, be my guest. This could be the single greatest opportunity to be strategic because this is where you want to be hunting for the diamonds in the chaos. So how do you find them? Well, it's not really about just simply buying what's down the most on the day or on the week. It's about finding what's showing relative strength. The key metric I'm watching right now is a coin's market dominance today versus 1 week ago, before the crash really started. So here's how it works. If a coin's price is falling, but the share of the total crypto market cap, aka its dominance, is actually increasing, what does that tell you? It tells me that smart money is flowing into the coin. It's bleeding less than everything else because something is actively buying it on the dip. Conversely, of course, if its dominance is falling, it means that people are abandoning ship. But that's just one piece of the puzzle. I'm also looking for two more things to see if it's got a bit of sign of life. That's a rise in daily active users, or DAU, which shows if the network is actually being used, and a spike in social interest, which shows a narrative is building. When you combine these three factors, you get a pretty powerful tool of which projects will possibly lead the recovery. And right now, there actually are a few altcoins that are flashing some incredibly bullish signs. But for those of you who don't really want to do what I'm about to show you and just want to know the simple answer of, is my coin performing better than most coins over the last week? Are people buying it? We'll have a look at CoinMarketCap and the 7-day right here, and you can just simply see which coins in that general area are doing what. You can see here Bitcoin being down 5% is obviously better than ETH being down 13%. Where this can possibly go wrong is we may have had a massive run 2 weeks ago from ETH, so of course there's likely going to be a larger pullback. That's why it's important you dive deeper into what I'm about to show you right now, because at face value, it doesn't really tell you the whole story. Here's a really good example of what I'm about to show you. These three things that make me so interested in a coin on these dips, which likely means they could have a pretty strong rebound, and that is World Mobile Token. These guys are 175 million market cap and in the DePIN space. DePIN, as we know, is a pretty powerful narrative, so that's obviously a big tick, but I think the reason why this coin is on so many people's radars, as you'll see, is because these guys have a lot of active users, as I'll show you. They have a flourishing ecosystem, okay, 71,000 what they call air nodes, and this is essentially the amount of like nodes on the network that help run this decentralized world mobile network run by people. The daily active users are 2.2 million, which is looking at all of cryptocurrencies ever, period. All right. These guys are like, what, top 5? This is crazy. They're competing with Solana and they're 175 million market cap. Now, the other thing that I mentioned earlier was, of course, the social engagements. Are people even interested in the project and buzzing about it? And as you can see here from Lunar Crush, they are. We had a massive spike recently. This coin kind of does trend around the 100,000 engagements per day level, but you can see it has begun picking up steam. A lot of the time with engagements on Lunar Crush, you do want to zoom out and have a look at what it's been doing over the course of months and years. That tends to show you a much better trend, because when the market starts to run, you tend to have crazy spikes. So as long as it is trending up based on the last few years, it's a really, really good sign in my opinion. And that third and final thing, as I mentioned, is the market dominance. You definitely want to be seeing, market dominance hold its strength, if not go up on these dips. That means people are buying it, or at worst case, it's just holding its strength in the market. Now, this is again surprising, because I want to use this as an example, because World Mobile Token is a small cap. It's barely a small cap, actually almost a micro cap project. And yet, if we have a look at the dominance from 1 week ago, it was 0.0042%. Now it's 0.0044. So it's actually gained market strength in this market dip. And for a small cap, it's crazy to me. It blows my mind. So you can actually find out more about how to calculate this on a video I posted 2 days ago. It goes into this in much, much more detail. If we want to dive more into World Mobile Token, and this is what you should do if you are looking to buy any cryptocurrencies you don't already own on these dips, is to look into the fundamentals, right? That sort of stuff is great, but what I've heard, and this is all a rumor, but what I've heard is a publicly traded company is apparently going to be starting a treasury, which is buying up World Mobile Token on the open market. Now, this is like we've heard with SharpLink, with Tom Lee, Bitmine, these guys buying up Ethereum in the strategic Ethereum reserves. That, of course, creates buyer pressure. We saw what this did with WorldCoin when Altcoin raised $270 million to go ahead and start buying WorldCoin. It helped pump WorldCoin from like 80 cents up to $2. Again, this is a $3 billion market cap coin. Mill City over here announced $450 million private placement to buy SUI, again on the open market. What this did is create this pump back over here for SUI. So obviously it's a rumor, and I actually heard this from a friend of a friend, but if it is true, that's going to be pretty good for World Mobile Token. Obviously, waiting until we see what happens with this market dip is pretty important, especially because it is a small cap coin. But like I said, these three things plus the fundamentals give me a lot of confidence in this project. If you wanted to see what other coins I'm eyeing off on this dip and join a like-minded community for free and make gains like this, and plenty more, then come on and join Level 0, guys. Again, you can get it completely for free here. Sign up down below with Bitunix or Femex. We recently restarted our campaign with Bitunix, where you can win in a prize pool up to 6,000 USDT and a share in prizes like an iPhone 17 Pro Max. Plus, you get bonuses from us. You won't get this anywhere else. Keep an eye on macro as well. We have a macro expert in here, Frankie. He's in here every day producing content after content, keeping you informed. So with that being said, I'd love to see you in there. Take good care of yourselves, and let me know down below. Are you buying the dip? Can you buy the dip? If not, it's free to join, guys. Talk to you tomorrow. Take care. Bye-bye.